Today, we're diving into the financial realm, where markets are sending out warning signals that demand our attention. After the S&P 500 and NASDAQ celebrated 6 consecutive weekly gains, the spotlight is on Wall Street as it anticipates the Federal Reserve's final policy decision of the year. Joining us is Gari Chry, BlackRock's head of EY Shares Investment Strategy America, to unravel what lies ahead for investors in 2024. In the intricate world of investing, where the allure of high yields has drawn in a flood of cash throughout the year, Gari Chry proposes a shift in strategy that delves into the less glamorous aspect of financial planning, asset allocation. This shift is not a whimsical suggestion, but rather a calculated response to the ongoing financial cycle, a phase Gari aptly terms the pause period. This pause period is a crucial juncture where investors are urged to reassess their approach. Gari anticipates that the Federal Reserve is poised to halt its rate hikes, signaling a momentary respite in the trajectory of monetary policy. Against this backdrop, he advises investors to reconsider their reliance on cash. The rationale behind this pivot lies in the historical performance during similar periods. Gari's insight suggests that during these pause periods, investors tend to thrive. By anticipating a period of stable interest rates, he encourages a departure from cash holdings. This is not merely a precautionary measure. Rather, it's a strategic move to capitalize on the favorable conditions that tend to prevail during such phases. The call to shift away from cash is a proactive response to the shifting dynamics of the financial landscape. It's an acknowledgement of the cyclical nature of economic trends and a timely recommendation for investors to reallocate their assets in alignment with the expected pause in rate hikes by the Federal Reserve. As the financial pendulum pauses, Gari sees an opportunity for investors to position themselves advantageously, steering away from the conventional allure of cash and toward more dynamic and potentially lucrative investment avenues. Looking back at historical market trends, Gari Chry draws attention to a compelling observation. Investors have traditionally flourished during what he terms as pause periods. These are intervals when the Federal Reserve, in response to economic conditions, decides to temporarily halt its trajectory of interest rate hikes. Gari substantiates this insight with a visual aid, an illustrative chart that vividly outlines the positive outcomes for investors during these specific phases of market activity. The significance of this historical perspective becomes the cornerstone of Gari's advice to investors. It serves as a guiding principle, encouraging individuals to not only take notice of the ongoing pause period, but to actively participate in it. The chart he references becomes more than a mere graph. It transforms into a strategic tool, providing a roadmap for investors to navigate the complexities of the financial landscape. In light of this historical data, Gari's recommendation takes on a more actionable tone. It's a gentle nudge, urging investors to redirect their funds from the traditional safe haven of cash. Instead, Gari advocates for a more dynamic approach, one that involves capitalizing on fixed income market yields and exploring investment opportunities in quality companies with reasonable valuations. This shift in strategy is not arbitrary. It aligns with the historical success stories of those who have ventured beyond the safety of cash holdings during these pivotal pause periods. Yet, amidst this call to action, a subtle urgency permeates Gari's advice. The clock is ticking, and investors are reminded that the window of opportunity during this pause period is finite. The imminent potential for the Federal Reserve to initiate rate cuts by the second half of 2024 introduce an element of time sensitivity. Gari's counsel, therefore, is not just a strategic recommendation, it's a timely call to action, prompting investors to act swiftly and make informed decisions before the financial landscape undergoes another shift. The urgency in his message underscores the dynamic nature of financial markets and the importance of being proactive in response to evolving economic conditions. As we delve into the specific actions recommended by Gari Chry, the spotlight turns to the equity market. Gari's advice is crystal clear. It's time to strategically deploy the cash reserves that investors may have accumulated. However, this isn't a blanket recommendation to dive into any sector or stock blindly. Instead, Gari advocates for a discerning approach, emphasizing the importance of quality in investment decisions. The key word in Gari's strategy is quality. He outlines specific criteria that investors should prioritize when identifying potential investments in the equity market. Companies meeting the criteria of low leverage, healthy balance sheets, stable earnings growth, and ample cash availability are deemed as prime candidates. This meticulous selection process aims to mitigate risks and position investors in companies that have a strong foundation for future growth. Gari takes it a step further by pinpointing specific investment opportunities. He draws attention to the quality ticker, a term likely referring to an index or a curated list of companies that meet the outlined criteria for quality. This suggestion serves as a practical guide for investors, providing them with a starting point in their quest for quality-driven equity investments. Beyond the quality ticker, Gari directs investors towards promising areas with large growth potential. An example he mentions is IWBuy, suggesting that large growth opportunities within the equity market should be on investors' radar. This nuanced guidance provides a more concrete direction, steering investors towards sectors or companies with the potential for substantial growth in the coming year. Even the underperformers, the louable laggards as Gari puts it, are not dismissed. In particular, he singles out healthcare, a sector that faced challenges in 2023. Despite this, Gari sees an opportunity for a turnaround in 2024, emphasizing the importance of quality and anticipated earnings growth. This contrarian perspective underscores Gari's belief in the resilience and potential of sectors that may have faced temporary setbacks. Gari's advice transcends generic recommendations. It's a strategic blueprint that encourages investors to not only deploy their cash in the equity market, but to do so with a discerning eye, focusing on quality, growth potential, and even considering sectors that others might overlook. This level of specificity adds a practical dimension to Gari's counsel, empowering investors to make informed and targeted decisions in the ever-evolving landscape of equity investments. In his closing statements, Gari Chry imparts a pivotal perspective as we navigate the shift from the robust growth of 2023 to the anticipated slowdown in the first quarter of 2024. Emphasizing a consistent theme, Gari underscores the critical role of quality as the central pillar of an effective investment strategy. Amidst the uncertainties of changing economic dynamics, his advice serves as a strategic anchor, urging investors to prioritize fundamental attributes, such as low leverage, healthy balance sheets, stable earnings growth, and cash availability. This unwavering focus on quality becomes more than a recommendation. It emerges as a guiding principle for investors, providing a steady compass to navigate the forthcoming challenges and capitalize on opportunities in the evolving financial landscape. Gari's reference to the shift in economic dynamics echoes an awareness of the ever-changing nature of financial markets. Recognizing that the robust growth experienced in the previous year may face headwinds in the coming months, he offers investors a clear and strategic directive. Maintain a steadfast focus on quality. This directive acts as a guiding principle, akin to a roadmap, providing a sense of direction through the uncertainties that may arise in the financial landscape. By placing quality at the forefront, Gari underscores the significance of fundamental attributes in investment decisions. This encompasses aspects such as low leverage, healthy balance sheets, stable earnings growth, and cash availability, the very criteria he previously highlighted when discussing equity investments. In essence, Gari's insight serves as a reminder to investors that, irrespective of the broader economic conditions. Prioritizing companies with robust fundamentals can act as a stabilizing force in their portfolios. The metaphorical term financial storm, used by Gari, paints a vivid picture of the challenges and uncertainties that investors may face. In this context, the emphasis on quality serves as more than a prudent piece of advice. It becomes a strategy for weathering the storm. Quality investments, by Gari's reckoning, possess the resilience to withstand market fluctuations and emerge stronger on the other side. As investors brace themselves for the anticipated slowing growth in the first quarter of 2024, Gari's parting insight serves as a beacon of strategic wisdom. It's a call for investors to fortify their portfolios with quality-driven choices, positioning themselves not only to weather the impending financial challenges, but to potentially capitalize on opportunities that arise amidst the uncertainty. In essence, Gari's closing words encapsulate a holistic approach to investment strategy, one that combines foresight, resilience, and a commitment to quality in the pursuit of financial success. The financial landscape is evolving, and it's time to steer your investments in the right direction. If you have found this video informative and insightful, don't forget to hit the like button and subscribe to our channel. Also, feel free to add your thoughts in the comment section below.